Welcome to Insight into Audit, Bridging Theory with Practice, specially initiated for you, looking at the importance of practical exposure alongside theoretical learning. What is the role of audit in ensuring reliability of financial information? And to link the standards on auditing, engagement and quality control standard and its practical exposure, how we apply when we are going for practical audit. We have taken this initiative by Board of Studies Academics, right, to bridge that gap. And we have conducted our session on preliminary engagement activities, audit strategy, audit planning and audit program, risk assessment and internal control, of course, on series on audit evidence, and very important, substantive testing. And today is the third part of this topic, substantive testing. And the topic was taken by learned faculty Amit Kumar Rathore ji. He is not new phase for you. He has taken you to the journey of substantive testing as a 500 series during two sessions, one on 18 February and 21st February. And today we are going to conclude this topic, substantive testing. Of course, as I already mentioned you all, that your feedback is very important on which of the topic you want us to increase the session or time duration, or any of the topic where you feel we need to add on. Your feedback is most welcome. Right now, not taking much of the time, I request Amit ji to take you through the journey for this topic, substantive testing. Over to you, Amit sir.
Thank you, ma'am. Thanks a lot for the introduction and giving the brief what we covered in the previous sessions. We are moving ahead, but as we discussed in the last call as well, if there is any questions, if you would like to start our today's session with any of the previous classes questions, we can definitely do that. Or we can quickly move to the current or today's topics, today's sessions. Ma'am, just let me know if do we have any questions in the inbox, or we can quickly move.
Sir, I think we can move to the topic, and in between, student, as sir has already told you in the previous session also, and in the like both the session, he told you that you have to come after studying the topic. If you have any doubt, you can definitely ask. But in the meantime, when you ask the query, sir is starting with the session. So, sir, I think it's you please continue till the time we receive any query.
Okay, perfect. So I hope my screen is visible to you all.
Yes, sir. Yes, sir.
Perfect. So we are quickly going to cover the agenda. This is the agenda that we are targeting, but we have a lot to cover. I mean, there is a lot of practical knowledge. There are a lot of topics. Substantive testing is not something that we can cover up in maybe like these hours that we are targeting. Like for payroll, we take time. It goes into days at least for each client to complete this particular section itself, and there is a team of people who work on it. So I mean, obviously, with the practical exposure that to share, and the purpose of these kind of sessions is also to tell you exactly how we are handling these areas in practical aspect. So the thing is that in today's topic, this is the agenda. These are the four areas that we'll be primarily targeting. And since these are the areas which will be connected, remain connected because they are the balance sheet or the P&L FSLIs, which I mentioned, financial statement line items. So obviously all the assertions which were there for respective FSLIs, they will be covered in today's session as well. So moving ahead, so we will be covering payroll, borrowings, share capital and provisions. That's what the target is for today's session. Coming back to the payroll. So payroll, considering this is the first area. Now you see payroll is more or less like a P&L item, whereby if we will leave about the provisioning or accruals in terms of payroll related GLs or account balances, then this payroll will be a complete P&L item. And you know, for any profit and loss account FSLI, these are these various assertions that we are going to test. So assertions are occurrence, completeness, accuracy, cutoff, and compliance. Remember, when we talk about payroll, this is industry driven. So maybe for like a knowledge processing center or KPO for a global capability center like GCCs, maybe for a delivery center, which is like an offshore unit for any onshore client. So let us suppose there is a client which is sitting in USA and then they are planning to outsource one of the portion of their accounting to one of the service organization. So service organization is a term which we use in the audit, right? When there is a third party, there is a kind of an organization which is helping you processing some data on behalf of yours. So let us suppose they decided that the payroll is something which will be outsourced, and HR will be giving them only attendance at the month end. So there are payroll specific vendors, and most of the companies they prefer to outsource the payroll because it helps them kind of maintaining the confidentiality as well when it comes to the payroll, and simultaneously it is in most of the cases it is cost beneficial as well, because these payroll related companies they are specifically designing their processes to support any company or industry. So to give an example, like if there is a global capability center which is created by a US company from US, and this global capability center is sitting in India, those kind of areas, it will be pretty easy to do the payroll as an FSLI. The testing of payroll will become pretty easy because they will have more or less like the white collar employees. But when we are talking about a setup where an industry is there, a manufacturing plant is there, now what is happening, or like construction, real estate business is there. So in those scenarios, what is happening that there is a lot of people, lot of blue and white collar employees which are being hired at a contractual level as well. There is a lot of laborers which are kind of coming and going. They may be hired for not only for a couple of months but for a couple of days as well. So it becomes more challenging when you are doing the audit of payroll for these kind of environment, for these kind of industries where there is a lot of workforce which is like happening to and fro. A lot of inbound and outbound is happening. So when we are talking about payroll as an auditor, these are the assertions where the risk will rely. Like for occurrence, so we will definitely see that the payroll expense which is booked in the profit and loss account, whether that occurred or not. So occurrence becomes an assertion, and the risk associated to is basically that if there is any ghost employees, if you can recall a case of like Satyam, which happened obviously because of the economic recession that was there in the USA.
सर
And very, yes, sir.
सर सर घोस्ट एम्प्लॉइज स्टूडेंट्स को एक बार ब्रीफ कर दो कि होता क्या है.
So, sir, ghost employee means that the employees which we are thinking they are existing, but in reality they are not existing. To give an example, let us suppose there is a petrol pump, and this is a practical example that I came across. So, in the petrol pump, there are contractual employees. Okay, so if we have hiring like 10 employees, 10 or 12 employees, there is a kind of a management override of control that can be a problem over there. So the manager of the petrol pump is always in a position to hire more resources, and at least on a contractual basis. So let us suppose if they think that today is Sunday or weekend or Saturday, and they are because of any XYZ reasons they expect that the footfall will be higher. So they need only couple of resources for couple of hours. So they are suddenly hiring those people. Now as an auditor, when you will be going after a year end or a month end audit, you will find that they have some attendance records, right? Somebody came, signed up, and then they have paid as well. But you don't know actually these employees were there or not, whether they actually came there and worked or not. There is a risk when I'm talking about ghost employee. There is a risk that we hired some employees only on the paper. They are not existing in reality, and then we are kind of processing their salaries as well, and probably at a later stage the company is withdrawing that money using some XYZ channel, using the employees or using other third parties, and then getting some amount in cash, like deposited with the company back, right? So these are ghost employees which are not existing in reality. So occurrence is a very big problem. Like payroll, we are thinking that this payroll amount, which is let us suppose 100 rupees is in the P&L, this 100, whether this expense actually occurred or not, whether those employees actually worked or not. Okay. And we are talking about organizations whereby, so these are the small things I'm talking. So ghost employee occurrence can be a very big problem where the contractual employees are hired. In cases of the permanent employees, still this can be limited, but the risk is still there. As an auditor, you need to mitigate the risk, right? Maybe the risk which is there, the I will say the magnitude of the risk can be high or low. That's a different thing depending on the industry, but still the risk will remain. So just imagine an organization whereby an organization of MNCs whereby thousands of employees, lakhs of employees are working. Okay, so this occurrence will remain a challenge that if let us suppose in one of the legal entity they are showing an payroll expense related to one employee, you don't know as an auditor whether they in reality they existed, they worked there or not. Saying this, so there is a incident that I can recall. I mean, this is the news of tomorrow, yesterday or day before yesterday only, and there was an US a kind of an executive who hired one employee for literally doing nothing. Okay, this employee was hired from India, and this employee was on payroll for more than 3 years, but literally was doing nothing. The salaries were being processed, the increment was happening, the bonuses were given, everything was happening. But this employee never reported to the company. Only the machines were there who were shown, only the IDs, fake IDs were created, only there were a couple of mails that was exchanged between that executive and the employee in India. And then this employee used to get, I think, 45% as the return in a different bank account. This executive of the company. And this is a very reputed company. The case is only for day before yesterday. If you can kind of like do a little bit of research, you will understand this is in the available in the news as well. So this is what is ghost employee, whether they actually were there or not, right? So when you want to test whether these ghost employees were there or not, and I was actually connecting this to another scam which happened like in Satyam. You see, there were a lot of employees because Satyam was also kind of an IT company whereby there are a lot of contractual employees that were there, especially these employees related to for the development of softwares, etc. They come on the need basis, right? So if I have a client, if I have a project which is running for like 6 months, I don't want to hire a permanent employee for 6 months in my organization. So what I do actually, I hire contractual resources, the freelancers, and then there are organizations which provide those kind of resources. But we don't know whether those contractual resources were actually there inside the company, they were working or not. So to do that, what we do actually, obviously, when we are talking about substantive testing, everyone be very careful because substantive testing, how much procedures you are going to perform, how much efforts you are going to make. The when we talk about substantive testing, we talk about nature, timing, and extent. Okay, all these three things, nature, timing, and extent, will be dependent on how and what level of controls are there. Whether you are going to place reliance on the controls or not. So if payroll is an area that I'm doing substantive testing for, how many samples I'll be checking, what is the procedure that I'm going to perform, and when this procedure will be performed. So nature is what is the procedure, timing is whether it will be interim or final audit, and extent is the number of samples, right? So all these nature, timing, and extent, this will depend on the internal controls. If I'm going to place reliance on the internal controls, then the samples will reduce. Otherwise, samples will be higher. So when I'm talking about the occurrence ghost employees, I will understand what is the company's process, internal controls, how the employees are being onboarded, how the attendance is being recorded, how the processing of the salary is done, whether the payroll is outsourced to a third party or the payroll is in-house, how the attendance monitoring system works, how HR is sending that data to the payroll processing department. This all is basically help me controlling this particular risk of ghost employees. So in the substantive testing, let us suppose the internal controls are really good and we can rely on the internal controls. Then from an audit procedures, what we will do, we will verify the employee master, we will see the employment letters and attendance record. Okay. Nowadays, with the help of the technology, it becomes pretty, I will not say convenient. It's in comparison to the what used to happen earlier because now you may have biometric records as well of the employees. Saying this, if you are aware about the news, there was a news, I mean, a year before, whereby the government also was planning to have biometric systems. To some extent, they have actually implemented it because there was a when the Controller General, this CAG actually, when it came out with their report, they pointed out that there are some lack of internal controls. The robustness of the internal controls is something that they suggested, Controller Auditor General of India, and on the report of the CAG, The government announced that they will be putting a lot of biometric systems for attendance monitoring, whether the employees are actually coming to office or not. Okay. So this is how, I mean, with the biometric systems, this can be still reduced to some extent. The risk will still remain, right? That's what I'm saying. As an auditor, you are not there to, I mean, the risk can only be reduced to an acceptable limit. Always remember this. Because you are doing audit, you are not doing certification. So you cannot remove the risk from the system. It is just like you can reduce it to an acceptable limit whereby this risk which is remaining there is not impacting your audit opinion, right? So that's what as an auditor you are supposed to do. Second is completeness, whether the amount which is there in the profit and loss account is complete or not. The point is, I discussed this in the previous sessions as well, that the management will always try to lower down to show less, undervalue the expenses and the liabilities. Payroll considering an expense, there is a high probability the management would like to reduce or hide some cost related to employees and all. They will show that this is omitted. So what we need to do is to check if this is complete. We need to do headcount general opening, how much opening headcount was there, how much joiners are there, how many leavers, what is the closing. We do a analytical procedure as well. So when I'm doing this, this is known as test of detail. But in the analytical procedures, what I will be doing, I'll be asking the pay register from the company for various months. And what I'll be doing, I will be making a trend. I will be doing a comparison. How much total salary was processed in the previous month? How much total salary is processed in this month? I can see a trend line, right? And if there is a movement, there is a significant difference that is coming in any particular month, I can inquire why it happened. This is to gain an overall control over the completeness. Okay. So let us suppose I can see like in June or July, the salary has increased suddenly. I can go back to the client and I can check the reasons. Maybe the increment cycle is June, right? So those kind of reasons can be there. Or let us suppose in one of the month suddenly the salary cost, the payroll cost got increased. The reason may be because there is an executive who joined our team, right? There is maybe a manager which we hired or something. So we need to do that. So to check the completeness, we do a month-on-month trend analysis. To check the occurrence of the ghost employees, we do EODs. Okay. For accuracy as well, wrong salary, PF, TDS calculations. So for this, you need to pick up some samples and then you need to do recalculation. So you see, in the first session, I discussed there are various ways through which you do the substantive audit procedures. They are test of details, they are analytical SAP, which is known as SAP substantive analytical procedures. There are recalculations, reperformances, which I discussed in the second session, I think, about the depreciation, analytical depreciation, recalculation. So that is all is a part of the substantive audit procedure. So accuracy, to check the accuracy, we will pick up some samples and then we will do testing. We're talking about cutoff here. That cutoff means that the expenses related to March. Again, cutoff is all about matching concept, that the revenue of a particular period should be reconciled, should be matched with the expenses of that year. So we are showing revenue of, let us suppose, last year, then all the expenses related to that particular year should be recorded in that year itself. So that revenue can be compared with net profit. So if there is a cutoff risk, it means, let us suppose, for some companies, you will see that they process their salaries in the first week of the subsequent month. Okay. Like for major of the companies that you will be auditing, they process their salary on the last working day itself. Like if 28th is going to be the Saturday, 27th is when everyone's salary will be processed. In MNCs, generally this is the culture, but in other companies which are especially India based, you will realize that the salary is being paid in the first week of the subsequent month. So the March salary will be paid somewhere in the first week of April. Now the point is, if there is no expense in the March, which is kind of notable, which is omitted or forfeited by the management, then there is a high probability that cutoff is at risk, which is impacting another assertion of completeness as well. Okay. So for March salary, if it is going to be processed in April, what we need to do is to book the provision. We need to book the accrual. The salary has to be there, right? The expense and the provision has to be booked on 31st March itself. So to do that, we will do the provisional testing, and then we will be doing the test sales before and after year end and match with the dispatch time. So this is basically the salary it will be processing in the next year. You will see what is the provision that you made on 31st March. Okay. So if let us suppose they made a provision of 100 rupees, but the salary subsequently they paid is 120 rupees. So you can definitely go back to the management and ask them to book 20 rupees of additional expense. I hope this is clear, right? So it means the provisioning is not done appropriately. The management has intentionally or because of an omission or maybe a recalculation error or whatever, but what they have done is actually they have reduced, shown the less amount in the P&L. So this is what we do when we do cutoff testing. And the compliances is basically PF and ASI not deposited on timely manner. So you will be reviewing the GL and you'll be verifying the nature of the income against contracts and supporting documents. I think, okay, so this is not the nature of expense, but income. This is income, this is expense. But like in this, what we do in the compliance for PF and ESI testing, we pick up certain samples and then we see what was the date when it was due to be paid and what is actually the challan date on which the company has made some payment. Even in the CARO as well, for any delay deposit of the statutory dues, you need to report them separately. Okay, so that will become a part of your CARO reporting as well if there is a delay in depositing any of the statutory dues. So these are the assertions when we are talking about payroll: occurrence, completeness, accuracy, cutoff, and compliance. And what we do actually, like we have a work table, we have a template in which we practically do all this, what I was telling. So to summarize, how you test the payroll, to test payroll, there is an analytical that you do, analytical procedure, which is a month on month comparison. We call it a trend analysis as well of the payroll. There is an analytical. So trend analysis is also one analytical. There is another analytical that you can also prepare, which is like you can calculate like for April month, what is the average head count salary per head count. So let us suppose that April month's total is 1 lakh and there are 200 employees. Just to give an example, you can clearly see that it is the 500 rupees which will be there, which is the average per head count salary. And if that is the case, you can see what is the total head count during the month March. And then you can do the extrapolation and then you will get to know what should be the salary. You can, the extrapolated amount, you can compare it with your trial balance for March month. And then you can clearly see if there is any difference, you need to go back to the management and do an inquiry. If the calculation suggests that there is some amount which is missing, then obviously you can ask the management to book that amount or to provide justification for not booking that amount. Okay. So what you will be doing, the payroll testing, you will be picking up analyticals, trend, etc. You will be picking up files, the new joiners and deletion testing. So if there is new joiners, you'll be picking up those files, specifically testing them. We call them POD. There is an analytical that you will be preparing. There is another very important payroll procedure that we perform. I think it is inevitable to avoid that kind of a procedure. So what happens, especially for gratuity calculation and all, you know what is happening. So when we are talking about the benefits, employee benefits and all, gratuity is also a very big kind of a portion. So gratuity will be dependent on the attrition and the assumptions, the how what is the age of my headcount. So there is a kind of like a lot of information that goes into the actuarial valuation. Okay, which calculates that what should be the gratuity which should be due by now. So for that we need to involve an actuary. So when we are hiring an actuary as a management, we call it a management expert. But let us suppose there is a management expert actuary who has provided you the valuation of the gratuity that should be at a year end for this particular year. But let us suppose as an auditor you are not comfortable, right? So as an auditor you have to be comfortable with the working that the actuary is doing and simultaneously the background and qualification, education of actuary as well. So when a management expert is involved, the as an auditor we need to do the testing of that management expert's qualification, experience, etc. as well. So we need to create a memo to justify that the management experience, management expert is of that level that they can provide that actuarial report or any report that they are providing. So that's an understanding. But let us suppose after going through the understanding, you realized that the actuary is not enough experienced to provide the right report. You have all the rights to involve an auditor's expert as well. I mean, there was one client that we were working, and the actuarial report that came around the gratuity, we were not pretty much comfortable about it. So we asked the management about hiring or involving our auditors expert in this particular case, and then we actually involved an auditors expert to get the report on the gratuity. There was another report came which was kind of used for booking the expense and the provision of gratuity in the books. Okay. In the same manner, like when a management expert is involved, you need to do the background education, qualification, experience, etc. checking for that management expert. Simultaneously, it's the report of the this particular actuary when they'll be sharing. In that report, they will be mentioning that what are the assumptions they have taken, right? So that assumption is also that as an auditor we need to test that the assumptions that they are taking, those assumptions are making sense. Like if they are saying that risk-free return we have taken at 6%, right? As an auditor, you need to validate that 6% of the risk-free return. So from where they have taken this, from the RBI bonds or long-term bonds or whatever the source of income is, you need to test as an auditor because the calculation of that amount was dependent on those assumptions. The third thing that you will be testing, okay, when a management expert, especially in payroll, when gratuity calculation is happening, third thing is the data that you are sharing with the gratuity, this actuary. If the data that the company has sent to the actuary, if the data was itself not kind of complete or not accurate, there is a high probability the amount that you are going to get back to recognize as a gratuity or provision is also not correct. So we get the data. We ask the company to mark us as well when they are sending the data to the actuary, and then we need to validate that data as well. We need to cross-check the head count which is there in that data sent to the actuary. That is correct. The salaries are correct, and the average life. I mean, we need to ask the employee's date of birth. We need to do that calculation because on the basis of the life, on the basis of the designation, the amount of salary the whole this gratuity calculation will be impacted. So that's a very important kind of audit procedure in the payroll when we are involving an actuary for gratuity valuation. Okay, so we need to test three things whenever a management expert is there. First is the data that we are sharing with the management expert, the qualification, education, etc. of the kind of the management expert involved, and the third is the assumptions that the management expert is taking in their report to kind of get a comfort that the report is okay. And if we are of belief that the management expert is not the appropriate person, then what we need to do is to go back and we have all the rights to hire a auditor's expert as well. We can have another actuary and the payment of the bill of that actuary will be done by management only. Okay, because we are not comfortable. So I'll quickly run you through this particular template of payroll, how we do the testing, when we do the testing. So everything that I told you is already a part of this template, and we can quickly, I'll increase the size for the benefit of everyone. I hope the screen is visible. You can see the Excel, but this is how basically. So again, I'm saying this is from specific templates. I mean, if you talk about or think about a different firm, you may find that the memo is maybe the second tab, not the first one, which is the first tab. But ultimately, the purpose is with these kind of templates that all the procedures that I just explained, they all are being taken care until or unless being very specific, until or unless we have skipped some assertions whereby we think the risk is not there. So let us suppose in the payroll, we are thinking that all 5 assertions are not something that we'll be testing. Okay. So we realize considering the nature of the industry, considering the nature of the business of the client, considering the, let us suppose the operation level of the client, we believe that occurrence is something still we need to test, right? Or maybe accuracy is something we'll be testing, but maybe completeness or cutoff is something we are comfortable with the internal controls, right? Because the salary is getting processed on 31st and all those things. Then we will prepare this work paper only for those procedures which we have highlighted, right, in our audit planning, and they are relevant only for those assertions which are in scope. Just because there is an FSLI, financial statement line item, you as an auditor are not supposed to test all the assertions of that FSLI. You need to also decide what are the assertions which are relevant considering the operations of the company. Otherwise, you will end up doing the over audit. And if you miss on any important assertion, then that will be under audit. So you'll be questionable. Okay. So that's why we always say the planning, what are the assertions that will be tested, is always somebody who's manager and above should be doing it. Okay. So this is basically a payroll memo whereby we mention what are the procedures that we are going to perform, what is the purpose, and then what is the conclusion around it. We are talking about lead sheet. I told you in the last session as well, a lead sheet is basically an extract from the trial balance. And we see that these are the GL codes in the trial balance which we are testing in this particular work paper. That's the purpose of lead sheet, so that we have a control over on the complete trial balance, right? So we know, and in the trial balance which we will be documenting in our files, for each GL code, we need to give the work paper reference. So if this is a trial balance, we need to mention that this particular GL code is tested in this work paper. So every work paper that we are preparing, it will have a unique ID, UID. Okay. So every work paper has a unique ID, and then you need to mention that unique ID that this work paper is there in which this GL is tested. And if you think,
Sir,
yeah,
Amit ji, we have received a query.
yeah, okay.
Basing on kind of industry or organization, we have to decide the type of assertions to be
Right.
focused. Sir, could you please elaborate us, giving few examples also?
Okay, perfect. So I started today's session with two industries. They were separate. Okay, like I mentioned about GCCs, Global Capability Centers. So if there is a company, they are planning to have their own setup through which they have outsourced. So let us suppose account receivable is a process. I'm sitting in USA, and I think account receivable is a process whereby I need 50 resources who can take care of account receivable, but it is more energy consuming or more costly to create a kind of a center at in USA. So what I decided, I will have a company registered in India, and this company will be doing only account receivable process for my company. Okay. So I have hired 50 resources over here who all are working with the US company very closely. And then they all are kind of white collar employees. And there is a robust system of internal control which is there. Okay. So robust system control, it means when the employees are hired, they are being interviewed by US participants, or the company over there, they are finalizing their offer letters and all, it is being issued. The company has biometric systems in place, right? The attendance monitoring system is really very good. This SAP driven, the calculations that are happening of the payroll, it is, let us suppose, outsourced to a third party, so that the internal kind of office or the management of the company cannot have any over exercise or override of riding of those controls. And I mean, I'm comfortable with the internal controls. I'm comfortable that this is a kind of a cost plus markup entity, or it's just like a control center. So in this case, I'll look at a payroll and I will see, even though there are 5 assertions like occurrence, completeness, accuracy, cutoff, and compliance. But I think for this kind of a setup, the risk is not that much there. So I don't see ghost employees can be a risk for the company. Okay. So I can mark like occurrence is not a challenge because internal controls are very robust. So I'll not be doing the testing for occurrence. Completeness, I see that this is kind of, like, let us suppose this is the salary is being paid on last working day itself. So completeness is also not a very big challenge for me because, I mean, there is no provisioning, etc. that is happening. The actual salary is getting processed on 31st. But accuracy is still something I would like to test, especially for the employees which are hired during the year or who resigned during the year, like how their full and final settlement happened, or the joiners, when they are added in the database of employees, whether the date of birth or the cost, that all is correct, because this employee database that I am adding to, I'll be taking it out and sending it to the actuary as well at the year end. So in these cases, I can still kind of mark like these two assertions are not that relevant for me. Maybe cutoff is also not that relevant. Okay. Maybe the compliance is something that will be talking about, and I can take up some samples over here. So I'll be testing only compliance, and I'll be going through the accuracy. The rest is also everything. I have tested the internal controls and I'm comfortable. So I'm not marking them for testing. This is a kind of a one setup. But if we will change the industry, let us suppose now I'm talking about a factory where there are a lot of employees who are hired being on a contractual level, or I mean, the employees are coming or employees are going. I mean, I can recall this one example of one of the company we were working in Sonipat. This was only one customer company, whereby there was um a company. They created their uh, plant in Sonipat only, whereby this plant was manufacturing the shoe soles, and then they was only selling it back to the holding company. So there was no second, I will say, the customer that was involved, only single customer company. Now the point is, we realized that there is a person who was hired as a kind of company secretary by the company. Okay. And when we did the all kind of testings like accuracy, etc., and then we later on got to know that this person was not even a company secretary, even though he was already working for more than 6 months, because we went there at the end of the year itself. But when we realized that the records are not matching, the company secretary websites are not showing that membership number and everything, we raised it to the management, and then the person was later on fired. I mean, the point was basically that it was the management, one of the person in the management who was responsible for this, and this is known as overriding of controls. So even though the controls are in there, they are over there, but at times the management is, like just bypassing those controls, right? So if these kind of companies are there, where a lot of employees, a lot of workers, a lot of laborers, a lot of contractual employees are there, maybe occurrence is a very big risk. So one side, I mean, this risk is not there. The other side, this is the magnitude of this risk is high. It's not only a risk, but it is a high risk, right? That is there. So this is how you need to understand the payroll, the internal controls, and then you need to go back to the assertions, that which one assertion will be there, which is not there, and the ones which are there, whether they are high in magnitude or low in magnitude. Okay, because when you are doing a substantive testing, if they are high in magnitude, you need to take extra samples. If they are low in magnitude, then you will be taking less samples. Okay, I hope you got the answer. Do you want more clarification on this? Okay, so I'm just moving ahead. If in case you need more clarification, just let me know. So this is the lead sheet, which is an extract from the trial balance for testing. Now we are moving ahead to payroll register. So this is like a payroll register. For 1 month, I've taken a sample, and then I'll be doing the whole testing, how the calculation is done for this particular 1 month salary, and then the net amount paid. We can have a total here matching with the trial balance. Okay. When I'm doing this, sir or ma'am, I'm audible, right? Can you confirm, anyone? Am I audible, ma'am?
Yes, sir. Yes, sir.
Okay, I just wanted to check
Yes.
if the answer was given, it's clarifying, it's clarified or not, or you want me to?
Golti Anil Kumar, if you are, I hope your query is resolved. If you feel you want to add on something more or you want to ask, you may write to us.
Yeah. So
Yeah.
when we
Thank you,
are
sir.
doing this pay, yeah, this payroll register as well. So what happens at times? Okay, so again, a very practical kind of an experience. When I started doing the audit, initially, it's always exciting to know about the salaries of CFOs, like the finance controllers, finance manager, or the CEO, because they are just employees of the companies. So if I'm doing an audit of an company, my first, I mean, when I started the auditing, the first excitement always was to know the salary of the CFO or CEO. So what is the CEO or CFO salary? And if I have access to like 1 month's employee register, I can see everyone's salary. I mean, the finance manager I'm shaking hand with, the accountant that I'm sitting with, I have the access of everyone's salary, right? So this is very, very confidential data. Very confidential means very confidential. So even we don't have give this level of access to anyone in the team members as well. The team which is working on payroll as an auditor, they are very much restricted in terms of sharing this information with others. The HR also at times will come back to you saying that, sir, we cannot share this data for specific employees. Like if you're looking forward to have some payroll related testing for, let us suppose, CEO or CFO, they will ask you to come inside a cabin. They will ask you to sit in the cabin. No photocopies will be allowed. No pictures can be taken. You can only go through those files, and then if you want to make some notes, you can make those notes. That's it. And then you are bound by the clause of confidentiality in your engagement letter as well. You're not supposed to, leak this information to anyone. Not even to kind of discuss it out of excitement while having a cup of coffee in your cafeteria. I mean, not allowed at all. So this is one payroll. The employee attendance, how the mechanism works. So we will take few samples to check whether employee attendance is working correctly or not. The payroll register, right? So this can help you in doing a kind of like month-on-month comparison as well if you want to do. The head count, this is basically a summary. I did mention that you can check like what was the opening, how many total employees joined, what was the resignees, and what is the total head count at the year end. And this is what you can check with the March year end salary that is processed. So you can cross check that the closing employee is matching with the salary register of March. Okay. Then you are supposed to do some joining testing. So joining testing means the new employees who joined, you need to test what was the salary as per the appointment letter, when did they join, and
Sir,
all.
please zoom.
Okay.
Please zoom. It's not visible actually.
Okay. I'm really sorry. Is it okay now?
Yes, sir. Thank you.
Okay. Yeah, I'll take care. So this is like when we are doing the test of details of the new employee. So we need to cover up that what is the employee code, what is the employee name, what is the date of joining, designation, department, now their salary details, basic pay, DA, HR, medical allowance, all this, right? And then the number of days they worked in the month of joining, because there is a possibility like they might have joined during the month, during the specific month. To avoid any kind of like payroll delays, the companies generally they have a policy like anyone who will be joining before 20th, their salary will be processed in current month, and anyone who will be joining at later part of the month, let us suppose somebody joins on 25th, then the salary will not processed in that month, right? Instead, the salary will be processed in the next cycle, and then they will be paid for 1 month and 6 days. This is just to avoid the payroll delay, right? So this is an industry practice. So we need to know what is the number of days that they work, the expected salary for the month. So all this calculation is basically for the new joiners. In the same manner, we need to do the testing of the people who resigned to see if the FNF is happening correctly. Again, since we are doing the stat audit, you are not supposed to have the testing of all the employees. So you need to have a list of the resigned employees from the HR that will help you preparing this reconciliation as well, which I was showing you. So you can know how many employees left during the year, and whatever the number of employees left, you can pick up the samples from there and then do your resignee testing. Then what was the date of resignation, whether gratuity was due or not, what is the total amount that they should be paid, and if there any TDS was supposed to be deducted, and what they actually paid. So this will help you getting a comfort that whatever the total salary that you were supposed to pay for these resigned employees, that we have calculated and we found it correct. In some cases, again, depending on the nature, we may have an incremental testing as well. Okay, so in the same way we have a testing for joining and resigning, we can have another tab whereby we will be doing the testing of the increments that happen during the year. So that to check that the increments are also appropriately recorded in the system. Okay. Coming back to salary analytical, so I told you salary analytical is also something that you can prepare. So you can calculate the, I mean, there are multiple ways to create or calculate this analytical. But I just gave you an example, like you can have the total monthly salary for any month, and then you can divide by the total head count. You will come across of I will say average headcount salary, and you can multiply it with the total headcount for a specific month. That is suppose March, to know what should be the total amount of the salary which is in the March. If there is any difference, then definitely we can uh, we can cross check, and when we can inquire from the management. Okay, so this is how you prepare analytical, and this is the very important kind of an aspect which I discussed, actuarial data. So this is how you do the testing. So I told you there are three things that you test. One is basically about the validating the experience and all those things about an actuary. So when we are talking about that actuary, now there is a separate memo, a separate management expert work paper for testing is prepared. So in that paper, you will be testing the qualification. When did this guy qualified? When started practicing? What is the experience? What are the top clients? I mean, everything. So it will commensurate with you as an auditor. It will help you knowing that the management expert is someone who is appropriately educated to provide the actuary or value gratuity calculation. Okay. But over here, we will be testing the information that we are sending to the actuary because and the assumptions that the actuary has taken. So we will be testing that as per the calculation, the gratuity report, the actuarial report, the gratuity, what are the total number of employees, what is the monthly salary, what are the average age of the employee, right? Average past services, remaining working life, discounting rate, salary increment rate, this all data that is part of the actuarial report, we need to test it. Okay. Now, in the same manner, we need to test this data which is sent by the company. This is the data sent by the company to the actuary for doing the calculation. So remember, we need to have a comfort on this data as well. Because if the company is sending an employee with a wrong date of birth, the gratuity calculation will be impacted, right? Where because gratuity will be dependent on your age. Same is if they are sharing the kind of like wrong details of basic plus DA, which is the base amount for the gratuity calculation, then also it may impact your gratuity provision and the expense and liability that will be different. So this is how we do the audit of payroll. I'm all ears to listen if you have any questions on payroll part. I mean, these procedures, they are the standard procedures, but depending on the industry to industry, you may have more procedures around it. Okay. But that is what you need to discuss with your managers and with your partners and directors because they are the ones who will be finalizing planning. Yes, ma'am.
Yeah. Sir, how will auditor verify AS 15 norms or standards, and how will that impact our audit?
Okay. So any specific question you want to know about in that? I mean, you want the overall kind of an understanding, or you want any specific question that you have?
Student, if you want to have any specific question, you can ask. Otherwise, if you want to understand overall, please let us know.
Yeah. Otherwise, like it's already covered basically. If you see the ACE 15 as well, this is the all
Yeah,
that I
because in the
right?
sir
Gratuity,
has already
PF,
covered.
yeah,
And if you have any specific doubt, Golti, then please ask.
yeah. So over here, like one of the tab is missing. Maybe that's why this question is there. That one tab can be, but I think this is what we must have covered in the TOD that we are doing, right? Test of detail. So this particular one part of a specific statutory dues, I think in last session I wanted to cover this. Statutory dues, I can quickly show you that work paper as well.
Yeah. He is
Where it
writing like defined benefit obligation or defined contribution plan.
Yeah, so that is basically like your PFs and all. So how the PF is basically calculated, and then probably the contribution is basically so you have gratuities and then you have PF and all. Okay, so defined contribution plan is basically where you are making some contributions which is your PF, etc. And the plans where you are making a kind of a contribution, which can be gratuity, etc. Because you may have some funds which you have created specifically to deal with gratuity. There are a lot of organizations who instead of kind of, you see, if I have calculated a gratuity, this gratuity provision is there in the books, but what if I need to make the actual payment of the gratuity? I might not have the amount staying with me, right? Because even though a provision is there, the bank account is simple. It's a kind of a common department. But what if that money which should have been allocated for gratuity is now invested by a company somewhere else? And I actually, when the employees are being resigning, I have to pay them gratuity. Then I might not have the money with me. So what AS15 says that either this money which belongs to the gratuity and to the defined contribution and benefit both the plans, PF money and the gratuity money, that is something you need to invest somewhere else, right? So you can have a trust if it is approved, or you can invest using a third party channel as well. And then you need to kind of disclose this in your balance sheet. So we do the trust audits as well. If a company has created a trust which is managing this money of defined benefit plans and contribution plans. Okay. So I was showing you, so I told you how gratuity or these kind of plans are being tested. When I'm coming back, I am showing you like how PF etc. is tested. So you see, this is actually a part of the strategy dues. That's why uh, uh, kind of a tab is not there in the payroll file. But when you go to the strategy dues testing, I think due to the paucity of time, we were not able to cover this in the last session. But if you say over here, it is like anything, PF, TDS on salary, if even it is like professional tax, it is ESI. I'm just replacing the fonts. Okay, so ESI, Labor Welfare Fund. So all these that is required by the law to be deposited, whether the company is able to deposit that on time or not. In practical scenarios, for some companies we have seen, I mean, obviously those were the companies which were struggling with the finances. They were not the cash-rich companies. So they are deducting TDS, just to give an example, but they are not depositing it with government. They are using it for personal benefit. And this is something that as an auditor, you need to report. In the same manner, if you are kind of calculating, you have calculated some gratuity and then you are placing that gratuity amount, not in the risk-free investments, but let us suppose you have invested in somewhere property, or you have started kind of a new unit or a product line, or you invested in plant and machinery, it is not allowed. So you need to see the money which is allocated, where is this money also going. So this is the work paper actually, if you are thinking, and maybe this is what was creating a confusion. So we do the testing of statutory dues separately. Is this answer your question? I mean, for gratuity, we are using this work paper. For other than gratuity, we are using this work paper.
Yes, sir. Yes. I think we can move forward.
Okay. Perfect. So coming back to after the payroll, we can move to the borrowings. Okay. Now, borrowings is also a very important area, because if you'll realize in the balance sheet in the P&L side, I mean, sorry, in the balance sheet liability side, there is actually from where the money is coming in, right? So this liability side shows every kind of a position, every line item which brings money to the company. It can be anything. It can be your customers who are paying you money, right? If your customers are paying you money, how and what is in the liability side of the balance sheet which is given. So which is the line item which is actually showing you the customer's money that the customer is paying you. That is actually your profit and loss account, those general reserve accounts. So when you are talking about those FSLIs, this is the accumulated profit. And accumulated profit is what the customers have paid to you. So if you are getting any money from the customers, it is general reserves. If you are getting any money from the part of the society, which is we generally call they are kind of very risk averse. They don't take risk and all, right? So generally that money they deposit with the bank. That is the FD and all. So when they are depositing it with the bank, and then as a company you are going to the bank and borrowing that money. Then you are getting that money borrowing from the bank and the financial institutions. The banks are obviously the ones who are giving you borrowing, but financial institutions are those institutions where managing money of the public at a kind of a larger place. They can be like PF departments, they can be like gratuity trusts and all them. So they have a lot of money, but also they need to invest that money to gain better market returns. So we call them financial institutions. So borrowings can be from anywhere. But yes, so you're getting money from the customers, you are getting the money from the people who are saving it with the banks, and banks are giving it to you, leveraging on that equation. You're getting this money from the owners, which is basically a capital, equity capital and all. And then you are getting the money from the, uh, investors, which is generally they are venture capitalists, private equities, Shark Tank kind of departments, Shark Tank kind of setups, and they all are giving you money generally in the fully convertible preference shares. So they purchase preference shares from you, which are convertible in couple of years, right? And when they are converted into equity, and that becomes an exit route for all these venture capitalists, private equities, and setups. Okay, so we are getting money from equity, from the owners, that is equity share capital, from the investors, that is preference share capital, from the banks or FIs, that is basically the borrowings, your bank ODs or the long-term loans, short-term loans, that is all over here covered. When you are getting it from customers, that is your earnings, P&L, general reserve and all. And when you are getting this money from creditors, the credit is also a kind of a money. Then it becomes, because it's a short-term money, you have to kind of repay them after a couple of days only. So we call it working capital. Now this is the money that you have to keep in rotation so that the creditors, etc., will not get disturbed. While the rest of the liability side of the balance sheet can give you a long-term money, the creditors are there for short term. And that's why you have to have a current ratio or liquid ratio to make that balance. That in the asset side. Now, when all this money is coming into, this money is going into the other side. Okay, that is the asset side. So from this money, either you are investing into a plant and machinery, creating a factory, or you are having an office or building, or you are putting some money in the bank, or you have deposited that money or invested in the open market. So that will become your investment. You have purchased another company. So their investment will be there in your asset side. The asset is basically where you are applying that money, and the liability is from where you are getting your money. So borrowings is one of the way through which we get money, generally long-term money. But when you're talking about long-term money, a kind of a classification of that money, which is due within a year, let us suppose, is very important to know, because if that is due within a year, whatever amount, because an EMI is going on, then that particular amount will be current in nature, and then I have to disclose in my balance sheet accordingly. But if that amount is not current in nature, it is a long-term non-current nature, then this will go under the non-current heading. Okay, so that classification will also be dependent on whether it is current or not. So one single loan, this cannot be considered as short-term or long-term or current or non-current, because what is happening, even if it is a non-current, a long-term loan, the 1 year of a liability portion will be recognized as current loans. So we need to do that calculation as well. Simultaneously, even though those borrowings are for long-term, there is a probability that what we are ended up doing, that this for particular borrowings that I have taken, now this borrowing, this COD thing, what is happening, this borrowing can be from a fixed interest rate as well, from a variable interest rate as well. So there are companies which are MNCs, they take borrowings from different countries as well. So there are LIBOR, MIBOR, you must be understanding these terminologies like Mumbai interbank rates and then London interbanking rates. They are generally flexible in nature. So there can be a fixed percentage and then there can be some flexible. So we need to test that from where the money is being borrowed, whether the company had any better option to gain money from anywhere. Another thing, that is when we are taking those borrowings, generally they are long term in nature. So practically, if you say how things happen, if there are some covenants to that particular borrowings, which the company is not able to fulfill, the amount may get due instantly. Rather than waiting for a couple of years, the borrowings will become due for repayment as and when you are not able to follow those covenants. So we as an auditor, we need to do the covenant testing as well, that the company is complying with all the covenants. Otherwise, this non-current loan or a long-term borrowing should be shown as a short-term borrowings, because now the company has to make the payment. And if the company is not able to make the payment, then this can impact their going concern as well. I mean, there are multiple aspects to this, right? So through borrowing testing, you establish whether the long-term impact on the company will be that severe that the going concern can also be impacted. And when this is happening, you also need to see that what kind of comfort the management is giving you. Like, so for a going concern kind of an impact whereby the company is not in a position to repay the borrowings or the loans, maybe the company is holding company or a parent company, or there is a third party who has given a comfort letter. We in audit call this comfort letter. So when these kind of situations are there, we may ask the parent company to issue a comfort letter that if the company is not able to pay or repay all the obligations, the parent company will take care of it, right? So that comfort letter is something that we'll be asking. So I'll be quickly, so after giving you all this background around borrowings, we can quickly check like these are the assertions. So borrowings, the one side borrowing will be a P&L, this balance sheet item, but the second leg of the borrowings will be in the P&L. This is the interest expense, etc. So the EMI that we are paying, we need to divide it into two parts. One will be going to the P&L interest expense. The principal will be reducing my liability. So we should know that. So completeness, again, borrowing is a balance sheet item, a liability item. I'm again saying the management is always trying to undervalue or undershow the liability side. So borrowings completeness becomes a very big challenge for me. In the borrowings as well, there might be some lien, right, that has happened. There might be some assets that against which I have taken this borrowing. There might be some securities, right? Maybe a secured loan has been taken. All this should be reported to the MCA as well. So that testing is also very important, right? If we have taken a loan against inventory, we have taken a loan against a property, whether that lien was created with the MCA or not, right? So that we are as in company, they should not be allowed or should not be showing those assets as the free assets. They are not the free assets. The first right on those borrowings have been with the on those assets against these borrowings. The first right is now with the person who has given you that loan. So that is also something your financials should be telling you. So completeness, we need to see the all the loans that the company has taken, they are recorded. If there is any loan that is taken but not recorded, I mean that will definitely is kind of unrecorded liability for us. So we discussed it, I think, in the first session about how to do the search for unrecorded liabilities. It is by testing the subsequent payments. So if the company has taken any loan, obviously, if as an auditor you are not testing the bank account transactions because you are relying as a balance sheet item, so you'll be going on the balance sheet date only to test it. But at least those payments are the recurring payments. So subsequently, all these payments that the company has made, you'll do a vouching of those payments to see if there is any item, there is any line item which was supposed to be clubbed under provisions on 31st March, they are done. If there was any customer whose payment is subsequently made, but the liability vendor's payment was made, but the liability should have been recorded on 31st March, you will test that as well. If there is any borrowings, interest, or EMI is being paid by the company later on, you will definitely see whether the liability was existing on the 31st March or not. And if it is not there, you will ask the management to to record that liability and everything. So this is how you do the completeness testing of borrowings. Simultaneously, for completeness, you will be writing to the banks and all. So the bank confirmation, which I shown you all in the I think first session, if you can recall, there was a specific section around the borrowings. Okay, so all the relationships that the bank has with the company, The bank is supposed to revert on all relationships. It's not only the bank confirmation does not mean that you are only getting confirmation on the bank balance. So all the relationships, even if they have some investments with the name of the company, the bank is supposed to revert in that confirmation letter with the statement of the balance as well of that investment. So for borrowings, completeness will be sending the bank confirmations and then we'll be reviewing the bank statements. That's what I told you, subsequent bank statements to specifically check if there is any payment and anything happened. Because this is on in audit. I mean, a very good question. I mean, as a manager, I always ask this question when I used to take interviews. And this one question was that how do you do search for unrecorded liabilities? How will you test this unrecorded liabilities in the books? The answer is very simple. For any company, go to them, ask them the subsequent bank statement. If we are doing the audit for, let us suppose, March year end, or just to give an example, in February, to see what are the various payments that the company has made. And then I will see these payments, they were related to a liability of previous year or of current year. If they were related for current year, we will leave that. But if it is related to previous year, we will see whether the liability was recorded in the previous year or not. If not, completeness is a problem. And I'll ask the management to pass the accounting entry to record this liability as well. Right. There is another possibility. The company missed any entries or the loans were repaid, but they are already there. So all the rules. But like I mentioned, just because this is a balance sheet item does not mean all the assertions will be relevant. So if you as an auditor, you decided that existence is not a very big concern because of the internal controls and everything that is in place, so you can remove this as well, that the existence is absolutely okay. I mean, need not to test. But if you decided that existence is something you need to test, then you will be verifying the loan agreements and the confirmation. And at times you will get to know that and there is an NOC as well, which the borrowers generally issue, right? So no objection certificate. If there is an asset, maybe this asset release kind of a letter will also be there. So you can check those. If in case as an auditor you think existence is a risk and you need to do some testing around it. Same is accuracy. Now the interest expense which is there in the P&L. Now there is a probability the interest is miscalculated. So to do the accuracy testing of the interest, you can recompute the interest, recalculation. And then you also need to kind of do the recomputation for the future kind of payments, because in those cases what will happen, I told you, any payments that you are planning to pay in the next 1 year will become the current borrowings, and anything beyond that 1 year will be your non-current. So it means you have to recompute the interest as well. Cutoff is March interest is due or not. I told you, I mean, subsequently you will be post year end payments will be checking and then you'll be looking into this. Classification, current portion wrongly classified. I mean, I discussed this twice, that for all the payments that you are supposed to make in the upcoming 1 year, you are supposed to classify this as a current, and then you need to show in the balance sheet as current borrowings. The remaining will become non-current. Verify repayment schedule and 12-month split. Disclosure, security, default and not on the component testing we did. So if there is anything that is going against that component which can push the company to repay the loan immediately, you need to do that testing as well. So this is borrowing basically. So I told you what is the risk and how you as an auditor you do the testing. I'll quickly jump to the template to show you how we record it as well, all the testing that we are doing here. You see, there was a company that I was doing the audit for. It was actually a power plant that was being built, right? It was around 1980 megawatt power plant, and there was a Chinese company which was involved in construction and all. When we started doing this particular audit of this particular client, we realized that there is a lot of loans that they have taken from overseas banks. So when they are taking the loan from the overseas bank, what is happening actually for an exchange? the risk is also there, right? So what if the way dollar or the euros are getting appreciated and the Indian currency is losing its value? In those situations, the loan which you have taken for 5 crores today may increase in total amount, right? Because when you will be paying, you have to pay it in USD or euro. So that foreign exchange risk is also there. So be very careful when the borrowings are happening from in a foreign currency kind of environment. And why I took the example of this company, because to avoid that particular risk, to hedge that risk, the company actually got into some forward contracts to freeze the amount, the dollar amount or the euro amount which they were supposed to pay. So when they are fixing a foreign exchange rate, they fix it by making a payment expense. So that payment of that premium of that forward contract will also be an expense, which is related to borrowings, and it will be clubbed in your finance expenses in the P&L, right? It will obviously give some company to some extent, it will hedge for the future payments that you will be making, and it will kind of address that risk of uh, INR losing value. So I hope you can relate to that as well. But in that work paper, in this work paper, we are not covering that particular part. But what I'm trying to make a point here is that you will realize that practically there is a lot which goes into, uh, and it's not only the work paper or the template through which we are trying to cover the testing. Okay, so it is basically a situation like in industry to industry. You need to come up with your own audit procedures. These are the standard procedures which we perform everywhere. So this is the memo. Again, the template is basically kept same. So this is the memo. Over here you will be writing that the area is this, who prepared it, who reviewed it, what was the name of the company. You see the templates are very much standard. I think in previous sessions I also told this that the work papers should be self-explanatory. It means when you are submitting a work paper to your seniors for review, the work paper should be so adequately prepared that they need not to call you. Okay? They need not to ask you to sit next to them to explain everything that you have done. So whatever you are doing should be properly documented. Like it's not only we are writing what is the work that we have done, but we also give here reference, right? In the next column that we have done this ledger dump for obtained from the client for the financials. And then we do mention that where are they kept or what is the testing that we have done. Ma'am, do you
Yes,
have a
sir.
question? Yeah.
Yeah. Sir, could you please tell us how to deal with the borrowings between holding subsidiary or between sister concerns?
Okay. That's a good idea. I mean, so generally what happens for the bigger companies, okay? So, like I mentioned to you about the comfort letter. So let us suppose one company is there, you are the auditor, and you have a doubt that this company will not be able to pay the loan which they have taken from a kind of a sister concern or from a holding company or for someone. So you think the going concern can be impacted. So in that case, the parent company may come in picture and then they can issue a comfort letter, which I told you. Okay. So this is how, I mean, the loan taken is being dealt. To give you more practical aspects, we call them intercompany transactions. And then generally, companies have a intercompany tool that they are using for management of these transactions. Okay. So practically, if you see all these transactions that are happening between companies to companies, there is an agreement that is signed. If there is any issues which are coming up, the parent company is getting involved with the comfort letter and all those guarantees. And simultaneously, there is a year-end confirmation as well that is happening. We are calling it intercompany confirmation or related party confirmation, right? So we are sending mails or we are actually checking the company how or what is their process of taking the intercompany confirmations. So if the company has a tool whereby both the parties are approving it, and we are going to rely on that tool, let us suppose that since the other party, the other company, my sister concern has approved it. So these are the numbers which are matching. So my borrowings at the year end, they are matching with the assets investments of the other company, right? They have given us me the loan. So what I will do, if that tool is there whereby the confirmations are being passed on by the company, and as an auditor, I'm going to place some reliance on that tool. then I'll be asking my IT audit team to do the ITGC and the ITEC testing. ITEC is basically automation controls, like when somebody is approving it, how this is flowing. And ITGC is basically all about change management, etc. That what are the various changes happened in that tool during the year. Because there is a possibility if I'm going to rely on that tool, maybe only for 1 month to show the auditors the tool was working fine, but the rest of the time period it was not. So it's not only that on a particular date you need to do the ITGC or ITEC testing, but you need to do the change management as well, right? For the complete year. But as an auditor, if you decided that you are not going to rely on any tool for the confirmation of intercompany, etc., then you can do the intercompany confirmation separately as well by sending a physical letter, or generally a mail is also okay from your uh, office IDs to the sister concern or to the other loan companies, and then that can be handled. The companies can revert over those mails. So this is how generally we do intercompany and related party transactions. But to add on one another suggestion or maybe another practical experience that I will do, what happens for a company whereby a large amount is involved, where are subsequent or pretty much complete transactions are happening. For that kind of environment, it becomes very difficult, okay, to kind of lend money or to take money from another legal entity, and then there are a lot of transactions which are happening continuously. So the parent company generally, for those MNCs which are very big in size, they don't give loans to each other. Instead, what they do is they create a cash pool account. They call it cash pool system. Okay. So what happens? They create a treasury department which handles the cash pool kind of a department. In that cash pool, each legal entity, wherever it is, they create a bank account which is known as cash pool account for that legal entity. If you are issuing a check or you have any excess money at the day end, which is of no use, you don't have any visibility. So as a LE, as a sister concern, what I will do, I will transfer all that amount to my pool account, cash pool account. By the time it will be end of the day, the cash account should be zero, cash pool account should be zero. It means I, as in treasury department, I will take out all the money from that cash pool account, and I have a cash pool total account at an organization level. I will have this money over there. Now, if let us suppose you want to issue a check to a vendor, but you don't have any money in your bank account. So in that kind of situation, to avoid a dishonor kind of a situation, you can write down the check from the cash pool account. Because cash pool account is an account whereby any transactions that will be happening, the cash pool account or balance should always be zero. So that's kind of a recurring loan or a real-time loan mechanism system for the bigger company. So when you are issuing a check from the cash pool account, the money from the cash pool overall account is already coming to your account, and this will be shown in the books that you have taken a loan from the main cash pool entity, which is the parent entity. Or if it is like one-on-one transaction with one cash pool account of one sister concern and from the another sister concern's cash pool account, then it will be recorded as the borrowers and as the investors in both the books separately. So for bigger entities, they don't do this. I mean, one type of transaction that I'm giving you this loan and then you can repay it in 5 years, 10 years. That's not the case. But if it is happening, I mean, obviously, if these companies are not that big, this may happen. And in those cases, intercompany confirmations can be there.
Yeah.
Otherwise,
So Shraddha
cash
is
pool.
asking,
Yeah.
please elaborate for sister concern in group audit. Please elaborate for sister concerns.
Okay. So sister concerns is basically, if you want to know the a kind of a meaning of sister concern, it is like if I am a holding company, I'm a parent company. It's not only like I have one subsidiary. I may have 20 subsidiaries as well, which are running across in different countries. Maybe within India as well. If I have, let us suppose one company I'm doing the audit, this company may have created 10 different companies. These 10 different subsidiaries that I have as a parent, they are in each other relationship. They are known as sister concern. So let us suppose I have a subsidiary XYZ Limited and I have a subsidiary PQR Limited as well. So this XYZ Limited and PQR Limited, they are for each other. They will be considered as sister concerns. Okay. For me, they both are subsidiaries. For both of them, I am the parent company. But what is the relationship between both of them? That relationship is known as sister concern. What happens, again, a very practical kind of a situation. You see, I mean, this is a news and then you can relate to it very well. Like, like the way Gurgaon is being built. Okay, you can connect. I'm just trying to give an example in your surrounding. So when we are talking about Gurgaon, one name of a developer who developed the Gurgaon comes to our mind, which is DLF, right? In the same manner, when we talk about Noida, one name of a developer comes into our mind, which is JP. They built all this Yamuna Expressway and everything, right? There are multiple projects. So when you are such companies, right, DLF or JPs, what are you doing actually? For each project that you are coming up with, they create a separate company. So instead of putting all this money into one company, so let us suppose we are acquiring land, a lot of land bank is being acquired. If we are purchasing, we are booking that land back into one company, and then we are running all the kind of like projects as well from that company. Then that land is related to that company, and because of any XYZ reasons like COVID came in between, if that particular project is something I'm not able to deliver, you know what will happen? Because now land is actually with that company. They have to sell that land to repay the amount of the investors, to repay the amount of the people who actually invested into that project. So to avoid these kind of situations, what they do, instead of creating all the projects from one company, they come up with this idea that they can have project wise companies. So if I have three projects going on, I can have three companies whereby the parent will be giving them loan and then the transactions will be happening. So these three companies which are there, they will be sister concerns to each other. And let us suppose if one company is going bankrupt because of any XYZ reasons, maybe the protest of the farmers or maybe their demand of asking for enhanced compensation. I mean, there can be XYZ reasons, right? Maybe for that project I'm facing certain challenges, that the impact of those challenges will not be there on the second company because those projects are into different legal entities. And these legal entities, right? So they have their own identity. They are not, I mean, the responsibility is not for one sister concern or one project. They are not responsible, which is in another company. But if I'm doing all these projects from one company only, then this company will be under tremendous pressure. Even if there is a project which is going not in the right direction, as a parent company, I have to fund that particular project. All the assets that I have in my balance sheet as a parent, they will belong to all the projects, right? So people don't care them. I mean, so when I'm creating so many companies and I'm investing in so many companies, they are sister concerns to each other. I hope this was your question, right? About sister concern.
Yes, sir. Yes.
Okay, perfect. So I was talking about the borrowings. So this is how we do the testing of the borrowings. Okay. So the first is the memo. Basically, memo is more or less like a work done. It's just an understanding that what is there in the whole work paper. So when you go through the memo, you know that what is covered in this particular work paper. So I was telling you guys that for each work performed, I do mention over here the reference as well. They're like tab 1, 2, 3, 4. So you need to mention here that tab 1 refer for this tab 1. Like the first step is basically taking the ledger term from the client. So when I'm saying ledger term, that day I told you this is a information produced by entity, IPE. Before I can pick any samples from the ledger term, I need to ensure the completeness of this ledger term. Otherwise, if at a later stage, if I'll realize that this is incomplete, there is a problem, right? The samples that I took, they were taken from a incomplete ledger term, which means now if I'm able to reconcile it with the trial balance, I have to run the sampling tool again. And just to avoid any biasness, right? We use sampling tools which throw samples, different samples every time you run the tool. So if you are running samples on incomplete data, there will be some samples which you need to test. God forbid, if you have shared that data request to the client that you want evidences around it, And at a later stage, your one of the senior came back to you saying that the dump you used for selecting samples was not complete because you didn't do a completeness check. Now, if you will be running the sampling tool on the complete dump, here is a problem because now the samples that the tool will be throwing, it will be different than the previous samples. And the client will be frustrated with this situation, right? Because they might have started working on the previous requirement. And now all the efforts that they actually made to provide you evidences around that, they are gone in vain, right? So be very careful. I mean, it can create a very big problem. So any information produced by entity, you need to check it for completeness and for accuracy before you go ahead and pick up some samples from it. Okay. Then there's second thing, samples were selected on judgmental basis. You see. So when you are talking about judgmental basis, judgment should also have a base. I mean, you cannot just come back and say that the judgment is something that I'm involved in. Even if the judgment is there, we call it like a judgmental systematic testing. So systematic sampling has to be there. Like, how will you do judgmental sampling? I can still decide like high value is something that I'm picking up, or maybe nth sample is what I'm going to pick up. So there has to be a kind of a reason. Judgments will become very difficult at a later stage to justify. So be very, very careful. Okay. Always use the form approved tools. Invoices and other related supporting documents were obtained. Test of details was performed. Observations were made. So this is what I have done. Second tab is basically the lead sheet, which I told you is the extract of the trial balance. So in my work paper that I have prepared, what is the total testing? And then what is the trial balance number shows for this GL account? And then if there is any difference in respective GLs, if there is a difference, first thing you need to see whether it is material or immaterial. And if it is a, let us suppose a material, then you need to go back to the client to check for the reasons. This is the loan summary and covenant working. Okay. So you need to do how many loans are there. What is the EBITDA on that particular loan? So you need to see whether the company is in the paying capacity or not. Otherwise, you may raise a question on the going concern as well, asking how are you going to pay this loan. You see what happened to Byju's, again a public news. A company which was somewhere more than $20 billion actually fall on its face and now having zero valuation, right? So the $22 billion wiped out from the market, just like anything, because they were not able to manage the finances, right? They started investing in companies like Whitehead Junior and all, which was, I think, unnecessary. And then they were not able to predict that once the COVID situation will become normal, then their fund flows, the borrowings that they are taking from the open market, the investments that they are taking from the investors, the revenue or the customers will not be there. You know, like the way COVID turned out and every parents, all the parents wanted the Byju's courses to be taken for their kids and all children, students. But what happened once this got normalized, people started sending their bots, their kids to schools, and then it was a very big impact on the Byju's revenue model, right? So the point is basically we need to check whether the EBITDA is there to cover up the interest income or interest expenses. And if they are not there, we need to go back and see whether a going concern assumption is impacted or not. Okay, like Biojuice. I just gave you an example. So these are the covenant financials. Again, this is the covenant testing basically. Then what is the debt to equity ratio, debt to EBITDA ratio, right? At times, you see in the loan agreements that the loan is given to the company. They asks you to check these financial numbers. So there might be some financial numbers. What is the EBITDA? What is the EBITDA and the debt ratio? It means, you know, like if the company is ready to pay all the earnings as in debt, how many years it is going to take the company to repay the debt, right? So this is what it is. So this may be a financial covenant you need to test. If the company is getting maybe not able to comply with this kind of a ratio or with this kind of a situation, it might trigger a kind of a situation and the borrower may ask company to repay the amount. So it becomes very important. Covenant, non-financial, there might be some, so like when we did the EBITDA testing, it was more or less like a financial number testing. financial covenant that the company had. But when we are going to the non-financial covenant, okay, then we are talking about any other covenant where breach can impact the contract between the borrower and the investor. Okay, so that's also very important to test all the non-financial covenants as well. They may be, like just to give an example, like submitting the MIS on timely basis, right? This can be one non-financial, right? And then the investor would definitely like to see if you are able to submit the MIS every time on time or not. So depending upon, there can be multiple parameters, and then as an auditor, you need to test them. This is the amortization schedule. So when I mention the amortization, you need to calculate that what is the, at least for the next 12 months, what is the total amount that you will be going to pay as principal and interest, because the amount that you will be um, amortizing over like 12 months will be the current in nature, but the remaining amount can be taken as non-current. So for term loan 1, for term loan 2, for term loan 3, I mean, whatever loans you have taken, you have to make amortization schedule for all loans. Roll forward and GL tie-up is, since it is a balance sheet item, so you can do the calculation that how much loan was there last year, and what is the movement during the year, how much is repaid, how much is new taken, everything. So this is basically just a roll forward and the GL tie-out. Then you have the debt confirmation, which I told you. It can be from bank confirmations, it can be from directly from the investor, it can be from the lender directly. So this is more or less like what was the debt that is in the balance sheet, and how we have repaid or any additions is there. What is the ending balance as per the confirmation? So this is basically what my GL says, right? And this is what is my confirmation says. And then I am doing a kind of a testing and concluding whether this is true or not. Like interest rate is matching, maturity date is matching, any amendments, etc. We need to test any additions that is matching. So wherever the matching is not there, that is what I need to inquire with the management again. I'll go back and inquire with the management. Same way, this is the interest summary working. Okay. So how much is paid, how much is still outstanding, the amount which is outstanding, for how many EMIs that amount is there. I mean, like we have to test from a lender's perspective whether the amount that they have given as a loan to someone, whether that is an NPA or not, if there is any provisioning that is required. In the same manner, we need to check from a borrower's perspective as well, that what is the amount, and if we have paid the total amount due in terms of EMI, in terms of interest, etc. And if we have not paid, I mean, we need to have a reason around it, why it has happened. Okay. So this is how you do the borrowing testing. And as I mentioned, the foreign exchange impact or those hedgings that we have done around the forward contracts, etc., that is not a part of it. Another maybe a related kind of a concept, because when we are talking about borrowings, remember if you are taking a borrowing for a long-term project. So let us suppose a long-term asset is being built. To give an example, I mentioned about this company which was creating a around 2000 megawatt power plant, and this was a long-term project. It was running in 2 years, right? Before the plant will become operational, or will start the distribution and supply of the uh, power under the power purchase agreement with the government of that state. Now, before we will move to that kind of a stage of completion, everything that is there for this particular plant is capitalized. Okay. So to give you an example, if you have taken a borrowings as well for that particular project, so any amount that you have repaid till the time the final completion of that project is there, that interest expense, that finance expense, even the forward contract premium, everything will be capitalized along with plant. Nothing will go to the P&L. Okay, it will remain as a capital work in progress and it will be capitalized. And the moment you will be able to complete your project, you will get the completion certificate, and then you have started kind of operating that particular plant. that moment onwards, whatever amount is there that you are paying against the loan, it will be an expense in the P&L. Okay, I hope this is clear. There's no confusion on this. Okay, I mean, if we will discuss borrowings, there are so many examples which keep on coming for any FSLI. I mean, it's not easy. That's what I'm telling you. When we do audit, it is like a team which works. For borrowings, we have to have like a team which is sitting, completing testing of only borrowings, and then it goes like for more than a month or so for this one FSLI. So there's a lot, and then every time you're picking up another company or an industry, the things will change. You need to do your procedures, some level of customization for each company. You need to understand what are the borrowings they are taking, from where they are taking, what are the terms, the agreements. You won't believe they are running into 200, more than 200 pages at times. There are so many disputes which are there. I mean, so you need to summarize those agreements. There is a lot which goes into actually. So we can move to the next concept if we don't have a question over here on borrowings. Can we
Yes,
move
sir.
to the next topic?
Yes, we can move.
Okay,
Move.
perfect, perfect. So the next thing that we want to test is share capital. Share capital is comparatively easy. I just mentioned, right? Share capital is something which is owner's money, owner's equity. But when we are talking about the companies where the companies are listed, they are publicly traded, and then the public has invested money into the share capital. Then as an auditor, it becomes more a kind of a bigger responsibility for you to test the share capital, to know the money that is coming in, that is flowing in, that is being appropriately recorded and reported to respective MCAs and all, right? If there is any change that has happened during the year, whether that is within the authorized capital or not, right? So that is something that you need to do. But share capital is comparatively considered as easy FSLI to test because there is share capital is not something which is frequently changing or a lot of transactions are happening. There are very limited transactions that happen. So when we do the audit of share capital, since it's a balance sheet item, we take all the assertions which are there in the balance sheet. So we need to test the existence, we need to test the completeness, we need to test the accuracy. So how we do the existence testing? The risk is basically that the shares which are recorded, but they are actually not issued. So the company is showing that we have this much of share capital, but they are not actually have issued them. You see why a company would like to do it basically? Because share capital will bring money. More money means they can show better picture of the balance sheet, which can give some level of manipulation or window dressing, and then it can attract other people to invest in company, right? So if as a let us suppose as a promoter you have invested 50 lakh rupees in one company, the valuation will be accordingly of the particular company. But if you have invested 5 crore rupees, the valuation will increase. The same is goes if you are talking about 50 crore rupees, and I hope you can understand, right? So that's why even though shares are recorded, but they are not actually not issued. Verify register of members, share certificates, board meetings, etc. So this is what we will do. This will be known as TOD, right? Test of details. So we will be picking up the share certificates, board minutes, register of members. Remember, this board minute is something which is very important, not only for share capital. So we have this a complete whole procedure of board minute summarization separately. There is a complete work paper which is being made, especially to summarize whatever is discussed in various meetings. Okay, they can be audit committee meetings, they can be remuneration committee meetings, they can be board meetings, any meetings, and then we do a separate testing for it and everything that is discussed in those meetings, because it can be about a bank account opening, a closure of a bank account, new investment, a decision of a new product line, service time, penetration of new geography, hiring of certain consultants, hiring of KMPs, key managing. I mean, anything and everything that is being discussed in the board may have some direct or indirect relevance for auditors. So this board minute is something that we need to summarize separately, right? So there's a whole template that we use basically. So that is different kind of tabs of different type of meetings, and then whatever meetings we are doing, with date, who was participants, what is discussed, what was the topic, whether this topic is going to impact the financials in any manner or it is just for an internal company kind of a discussion. Anything that is impacting our financials, we need to take a control. That as an auditor, I have tested that. Okay. So that is the share capital. We are mentioning the register of members, share certificate, board minutes. When it comes to completeness, shares issued, but they are not recorded. So completeness, check filing, space, bank receipts, allotment and all, right? So this is how you check the completeness. And accuracy, wrong face value or premium calculation. So you do the recomputation, number of shares into the face value and the premium. So you do that calculation, recomputation. So you are doing POD, you are doing the recomputation. That's how you are getting the comfort. Rights and obligation and presentation and disclosures. So whether the authorized paid up capital incorrectly disclosed, verify the schedule and anyone. So this you have to in the notes you have to mention shareholders with the more than 5% of holdings. There is a shareholder chart which is prepared which goes into the notes to the financial statements. And then simultaneously you'll be looking into the MOA and AOA to verify the terms of it. So that's what I'm saying. Say share capital, generally there is no changing that is happening. It's not that frequent, but if there is like change in the authorization capital or if there is new shares which are being issued, so that is something that you need to test, right? So for that testing, we have a separate work paper and I'll open that template for the benefit of everyone. Okay, so this is the work paper that we use. So the basic details prepared by and all, this is the share capital, equity we are talking, not the preference, because preference is generally the investors kind of an area. Okay. So all the investors, when they are putting up money in your company, they generally go with the fully convertible preference shares. Okay. So equity is what the promoters have already invested into, and then the memorandum, if there is any aspect, how we are, what are the assertions we are testing, and what is the description, and where we are testing this. So in the rest of the tabs, we will be taking care of it, like lead sheet. Again, the same thing, expect of the trial balance. So in the trial balance, let us suppose these two line items are there, which I'm trying to test them. So what are the numbers as per financials? How many variances there? Our working, what it says, if there is a difference, and then remarks. In the lead sheet, we are just looking into the equity share capital last year or current year, and what is the change in percentage. Why are we specifically looking into this lead sheet? Because there are very few instances whereby the capital generally changes. So if the capital is not getting changed, and let us suppose we were the previous year auditor, and there is no change during the current year, then we can mention it like there is no change, and we need not to do any other testing. Okay. So this share capital work paper. Okay. So authorized share capital, how much is the authorized? What is the issued? At the beginning, what is the movement in the share capital? That is what we need to test. Other equity is basically the equity, again, the complete your reconciliation of the previous year opening and closing, and this closing will become the opening of the next year. So you need to do that. Make a reconciliation as well. So this is the reconciliation. List of shareholders. So you are just testing the shareholders over here, that who is holding how much, because I mentioned that for anything which is 5% above in terms of holding, you need to specifically mention it. So you are downloading the MGT1 and then you are doing the equity testing. Over here, you are separately mentioning the name of the companies or holders who have more than 5% stake in the company. And this is how you do the working for it. This is how you show it in the work paper. MCA screenshots. If you have gone through the MCA website and there is any screenshot that you have taken, then that is what you need to record here charges. Okay, so that is how the charges, if there are any, that you need to test, and signatories, etc. I mean, share capital comparatively is very easy. Investments, etc. takes time. I mean, I can recall this one instance of one of the company getting acquired by another company into step acquisitions. We call it step acquisition. So what happened? The one company started buying the share capital of other company, right? So for part of the year, they were like less than 5%. So they are considered as only investment. For a couple of months more, they continuously kept on buying, and then they became the associate of that company. In by the time it was January, February of that year, they ended up purchasing more than 50%, and then they suddenly became the holding company of that particular company. So in this kind of an equation, from a investor's perspective, this is known as step acquisition. You are acquiring a company as under the step. For the other company, this is not making much of a difference. It's just like when this company will become your subsidiary company, then you have to consider, I mean, their accounts as well will be merged with your books of accounts, and then you need to do the non-contribution interest calculation. So you will be doing things like your minority interest calculation, whatever you call it, right? So NCI or MI, that is what you need to calculate. So in the share capital, it happens, right? So this is about share capital. We have 15 minutes, so we can jump to the last topic as well. Do let me know if you have any questions on the share capital. We can address them. Hmm. Provisions. Now, provisions is a really very important section because you see, provisions is something whereby the company would like to create less provisions because it is directly raising the expenses and the liabilities simultaneously. When we are doing the testing of provisions, we need to be very careful because even though I told you, right, this will be impacting the subsequent payments as well. You'll be considering subsequent payment as well to do the provisioning testing, etc. But I mean, there are few things that you can may not be as an auditor be directly able to relate when you will be doing the provisioning testing. But with the experience that you will learn, like in the session when I talk about property, plant, and equipment, we discussed that if there is a loss on the sale of fixed assets, then it's not just a loss. But what you need to do is to go back and test whether the depreciation policy of the company is correct or not. So if there is a loss, then you can definitely go back and ask that kind of a question. In the same manner, when I can recall when I'm listing this provision, not directly relevant to this situation, but yes, what I can recall, there was a company, one of the very reputed company, it's in the FMCG. We were doing the audit of this particular company, and then we realized there is a bad debt with a smaller amount, very small amount of bad debt was there in the profit and loss account. So I did the testing, and then I realized there is a high court kind of an order whereby a settlement was supposed to be happened with one debtor because this debtor has, I mean, applied for bankruptcy in the court, and then the final letter was that there is a settlement which we'll be doing, right? So let us suppose if we are doing settling this amount at 20% of the company's of the outstanding balance, then 80% is the bad debt. Now this bad debt is as if the provision is calculated correctly, right? If there can be a warranty provision, bad debt provision. If the provisions are adequately corrected, then this loss of bad debt will never go to P&L because we will have adequate provisions, right? So this will be actually you will be setting it off with the provision amount, not with the P&L. The problem is basically if your provisioning amount is not adequate enough to set off all the bad debt losses that you have incurred, then the rest of the bad debt amount will go to the P&L directly. And if something is coming in the P&L, it's not only that you need to test the high court orders or the settlement agreement. I mean, that is a separate thing. But on top of it, you also need to sit with the management to check whether the provisioning. So if let us suppose they are doing 2% provision on the debtors, this is an incident through which you can ask the management or challenge the management's assumption of 2%. You can definitely like to deliberate to discuss with the management why 2% is sufficient when this 2% is not able to cover up all the bad debts that are happening here. Okay. So provision, I mean that's a very important aspect. It's not only the normal provision of expenses. Okay, like rent was supposed to due or electricity bills were supposed to pay. Provision is not only limited to those monthly expenses, but provision is related to, I give you an example of debtors and how the provisioning policy can impact how the bad debt can be recorded in the P&L. In the same way, like warranty provisioning is there. Warranty provisioning is, I mean, again, a kind of a very vulnerable area, very risky area. Because when we are talking about provisioning, the warranty, the companies, the electronic equipments and all being sold by a lot of companies, and then they create a warranty provision thinking that how many customers will raise a complaint, right? How many complaints will be there? And depending on the estimates and the past trend, they come up with a provision that this much is the warranty provision that should be there. And what if the expense of warranty is something that is not able to cover up by the warranty provision? Then the warranty provisioning policy also something that you need to go back and you need to challenge as an auditor. You need to ask them why the warranty expenses are there in the P&L if warranty provision is there. I mean, so this all is around the provisioning thing. Okay. So when you're talking about the provision, because it is an expense in the liability part, I told you completeness is the most important. So you call it completeness, or you can consider valuation as well, because the company will always like to undervalue the liability and the expenses. So when we are talking about an assertion of completeness, we are saying that the expenses that are incurred, but they are not provided. So they are not there provided. Like rent and electricity, I gave an example that the electricity is already done or the rent is due for a March month, right? Or the electricity bill generally, which is a very practical scenario, that the bill will only come after March, right? So what if the management has not provided for electricity expenses for that particular month? It means they are not showing the complete picture of provision. And in that case, what we will be doing, we will be doing a search for unrecorded liability, which is basically you will be checking all the subsequent payments, the post year end payments, and then you'll be looking into that payments, whether these payments are related to vendor payments, related to expense payments and all. If they are related to a vendor payment, then you can definitely, if you want to have extra comfort, you can go back to the vendor's listing and then you can mark like for a vendor with high value, you can say that subsequently it is paid like 50%, 80% to get more comfort on the vendor balance as well. But if the payment is not related to vendor balance, but this is related to, let us suppose, some expenses. So it is related to rent, it is related to salaries, it is related to electricity. Then all those expenses you need to make a work paper and then you need to mention whether the expense of which the payment has happened subsequently was this related to previous year or was is this related to the current year. If it is related to the current year, then you can leave that particular transaction. But if the expense was related to the previous year, you will quickly go back to the provisioning schedule that the management has provided, and then you will see whether this all payments which are actually made subsequently, whether they were there in the provisions or not. And if you'll identify any such payment which was related to the last year, but the provision was not made, you need to ask management to book the provision. It means as an auditor, you need to check the completeness by doing the testing of search for unrecorded liability. I'm again reiterating, this is a very important procedure and one of the very important question that you will be asked if you'll be trying to join any organization in the stat audit department as an article or as a qualified. I mean, in both the cases, that is there. When we are talking about valuation, so it is not like the line item is missing. So like in the provision, So I noticed that electricity provision is not there. If that is the case, the completeness is a challenge. Completeness is a problem. But what I'm saying, the valuation, the under or over provisioning is there. It means the line item is there. Like electricity bill, the line item is there provision, but it is under or over provisioning. So I can see like for every month on an average, 1 lakh rupees of electricity bill is there, but the company has done only a provisioning for 50,000 rupees. This is under or over provisioning. Okay. So what we will be doing, we'll be recomputing the provision working. Compare the PY. I told you, right? So if on an average it is like 1 lakh every month and the bill is coming. So this is the trend analysis or the PY to current year utilization. In the same manner, if accuracy is a problem, we know that the calculation is wrong. So if the calculation is wrong, what is the management's assumption, right? On the basis of which the calculation has happened. And then if you want, you can do a recomputation as well of those assumptions. Cut off, March expenses not accrued. Again, this is the subsequent bills and all that you will be checking to apprehend whether they related to the March or they related to the April. Presentation provision shown instead of the contingent liability. That is or vice versa. I mean, there was a provision. So it's not only like the provision is shown instead of contingent liability, but it is also vice versa that a contingent liability is shown instead of provision because contingent liability is just in the notes, right? While provision is actually really impacting your P&L account. So always remember, basis the probability of occurrence, the liability that you are discussing, the transaction that you are discussing, it can either be a contingent liability or it can be a provision or it can be an actual liability. So there are three stages. So if it is at a contingent liability, then it will remain in two accounts. If it is provision, it will go in the provision section of balance sheet. But if it is expense, it will be recorded as a true liability. Okay. So this is how the provision. I'll quickly show you the template as well. Uh, the most important provision kind of a working is the search for unrecorded liability. I mean, in multiple cases, I was doing the audit of one HFC. I came across instances whereby certain provisions were not accrued, right? So we have to go back to the company to ask them to record those provisions as well, which after little bit of resistance, the management agreed, and then they increased the provision amount. Okay, so this is again a lead sheet that what are the various provisions that the company is recording in different GLs. Head-wise provision amount. So what is the nature of head? Rent, electricity, audit fees, warranty, liquidity damage, and all this. Provision amount is what is the provision amount? How much provision of this is reversed? And then what is the booked current year? And then what is the provision amount at the closing? So remember, whatever provision we are creating at the month end, generally that is reversed on the 1st April itself. Why so? Because for this year, let us suppose electricity bill is there. So what I will do, I will make 1 lakh rupees of a provision, and on the first day, 1st April, I will reverse it. So this provision is there in my books of the previous year, but in the next year, 1 lakh rupees is reversed. Now for the previous year, let us suppose the actual bill came as 1 lakh 10,000. So I will book 1 lakh 10,000 as my expense for April month. It means in the April, this 10,000 rupees of an expense is there, which is booked. So 1 lakh reversed and 1 lakh 10,000 is booked. It means for the April month, 10,000 is the net expense that I have booked. If this 10,000 is material, then as an auditor, I will object to that as well. I will go back to management and will ask them that the electricity provision should not be 1 lakh. It should be 1 lakh 10,000. Okay. Because I have an actual bill subsequently. But if the management is not agreeing, or I mean, not it's not the right statement, not agreeing. But if the amount is not that material, I can still, I mean, ignore that amount. That 10,000 is not material, so not creating any impact. So what is the provision? How the movement in the provision account has happened for various accounts. Reversed, the provisions that are reversed, you need to test them. Provisions booked at the year end, right? So whether this is related to this year or not. And then the outstanding provisions, whatever the amount that is outstanding. So this is what we do when the provision testing is there. But again, search for unrecorded liability. That is the most important aspect. Where we are just picking certain samples of bank statements. We are mentioning the bank statement date, amount that is paid, and then we are asking whether this is related to the previous year or current year. If it is related to previous year, whether this is in provision or not. If it is in provision and the previous year, then it is okay. If it is related to previous year but provision is not there or under provisioning is there, we will write down that this is a adjustment entry that we need to pass. And if this is for current year, it's okay. I mean, then we are not doing any other procedure on this. Right, so this is the provisioning. So, I mean, we plan to cover all these 4 areas today, and we are able to do that. I'll ask the team if you have any questions. I'm happy to address.
Yes, sir, Amit sir.
Yes, sir.
Yes, questions are I think over by
Okay,
now.
perfect.
And students, सर आपने बहुत अच्छा पढ़ाया सर स्टूडेंट्स को. प्रैक्टिकल एस्पेक्ट्स आपने बहुत ही अच्छे कवर किए सर. आपने जो प्रोविजंस के जो पॉइंट्स बताए हैं सर, कैन यू स्टॉप द स्क्रीन शेयरिंग सर?
Yeah, sorry. It's stopped now.
यस सर. तो सर आपने अमित सर बहुत ही अच्छा, बहुत ही आपने स्टूडेंट्स को एजुकेट. मैं तो यहाँ तक कहूंगा कि सर ये जो 2 आवर्स के आपने लेक्चर दिए हैं, एक लेक्चर को समझने के लिए स्टूडेंट को मेरे को लगता है 4-5 घंटे चाहिए आराम से. वो उसको लाइन बाय लाइन जो उसको जब इंटरप्रेट करेगा ना, तभी वो समझ पाएगा. तो आपने इतनी डीप बातें कही हैं, जितनी डीप बातें समझाई हैं, तो उसको समझने के लिए स्टूडेंट को टाइम भी चाहिएगा. तो स्टूडेंट्स, मेरी एडवाइस ये है कि आप अमित सर के जो लेक्चर्स हैं, 3 लेक्चर्स अमित सर ने दिए, उनको बार बार एक बार देखो, तो आपको इंसाइट उनसे और ज्यादा मिलेगी. सर ने बैड डेट्स के प्रोविजन फॉर बैड डेट्स के इतने शानदार, वारंटी, प्रोविजन फॉर वारंटी, सारे अकाउंटिंग से लिंक करके सर ने आपको समझाया. और ऑडिटर के एंगल क्या होने चाहिए ये भी साथ में एक्सप्लेन किया है सर. ब्यूटीफुल एक्सप्लेन सर ने. जो आपको सब्सटेंटिव टेस्टिंग का जो एक क्रक्स बताया, एक और डिटेल में डीप में जाके कंपनीज के एग्जांपल देके जो समझाया, तो आई थिंक इट इज एक्सेलेंट.
Thanks a lot, sir.
That's great of you, sir. And thank you very much, sir. On behalf of Board of Studies, sir, इंस्टीट्यूट की तरफ से मैं आपका many thanks to you, sir. और
thanks a lot everyone. Thanks a lot, sir, for arranging this. And students, it was very nice connecting with you. I mean, if you have any questions and all, I'll be more than happy to, because you have more sessions which will be there. You can raise your questions over there.
Right? Sir, students are also appreciating, sir. Meenakshi saying thank you very much, sir, for the worthy session. Great, sir.
That's amazing.
एक स्टूडेंट ने क्वेश्चन पूछा है सर, वो आप सर, व्हाट इफ द केस इज गोइंग ऑन इन द कोर्ट एंड प्रोविजन इज स्टिल लाइंग इन द बैलेंस शीट, हाउ शुड वी ट्रिगर दिस इशू, सर?
So in this case, this is not an issue at all. First of all, the issue would have been if the case is going on and the provision is not in the books. Provision means you have marked those expenses. You have actually recorded that expense. As an auditor, for me, the problem is when the client's case is going on and then they are not recording that provision. Okay. So if a provision is already there, I mean, it's not an area of concern. What I can do still, you see, when we do audit, we go back to the lawyers, solicitors, advocates. There is a specific confirmation that we share. We send to the legal, and then we ask them whether it is still a provision or it is to be converted into a liability. I told you 3 stages: contingent liability, provisions, and expenses, right? So an actual liability will be booked if the provision stage has surpassed. So when I'll be writing to solicitors, I will ask them what is the stage this particular case is, and then the reward or the confirmation that I'm going to get, this will clearly show me whether provisioning is adequately made, the amount is adequate or not, or whether this will be converted into liability or the provision stage is absolutely fine. That's how we do practically.
Great, sir. Great. Yeah. Thank you very much, sir. And students, thanks to all of you, students. Next session will be on 28th February and the topic will be completion and review.
Thank you,
students. Thank you, Amit
everyone.
sir.
Bye, sir. Take care, sir. Yeah,
Yeah.
we can.